But let's talk about one stock which has seen some phenomenal gains in the recent past, or for that matter, even from the March lows. That's IndiaMART. We've seen almost 25% uptick in the stock in just the month gone by. They've reported their numbers. The net profit has managed to surge. But let's dissect the third quarter and, of course, what lies ahead of us. Joining us right now, Dinesh Agarwal, the founder and CEO at IndiaMART Intermesh. Dinesh, hi, good morning. Great to have you on the show. 25% surge, Dinesh, in your stock price alone in the last 1 month, and has been one of the star performers from the March low recovery up until now. Firstly, how does it feel?
No, I think stock market is for you guys. We have to focus on our companies and customers.
Indeed, but you sure make investors happy, so just wanted to pass on that message to you. But tell me, while still at much higher levels, Dinesh, than last year, traffic to platform has moderated somewhat from 253 million now from the earlier 259 million in the last quarter. Has traffic topped off, you think, or what are the primary drivers for traffic to the platform currently?
Yeah, so if you see, our traffic was typically at about 180 to 190 million per quarter pre-COVID, and which has now increased to about 250 million, 260 million. And these 5% here and there, continues to happen based upon holidays or based upon seasonal effects. And there was also some pent-up demand in the quarter two, especially in July, August, September. And so I think now we believe that this is a new normal for the traffic. And we have definitely gained about 30-40% buyer side traction due to internet adoption and due to acceleration of the internet adoption.
Right. I'm just looking at your annual average revenue per subscriber, which is also at its highest level ever seen at about 46,700 per sub. What's caused this increase, and more importantly, are these kind of levels sustainable, you think, Dinesh?
See, if you see the annualized ARPU numbers are derived from the total revenue divided by the customers at the end of the quarter. And last 2 quarters, we have not seen increase in the customer numbers. We were at 147,000 customer at the end of March. And even now, we have finally reached to 148,000. So it's in the last 9 months, more or less the number of customers have remained constant. Since there was a lesser inflow because of the close down and because of the market demand. So number of new customers have not come in at the pace at which they were adding up in the last quarters. So that is why you are seeing this highest ARPU. Most probably it may taper down a little bit from here there, but by and large 46,000, 45,000 is the correct number that we can assume.
You managed to cut a lot of cost. And the pandemic, in a sense, was the trigger why IndiaMART was able to cut costs. You've cut down advertising, you've cut down a lot of other variable costs, a lot of sales employees. How many of your cost cutting which you did because of COVID, let's say in the last quarter and 2 quarters ago, is permanent in nature?
So I've repeated this earlier also. Our cost base used to be about 120 odd crores. And we believe that, half of that is temporary and half of that is permanent. So the permanent kind of costs are, we used to run many call center and BPOs operations. A lot of that has been shifted to work from home kind of operation. Plus, we have optimized some of the, office spaces that we do not need multiple offices in the same city now, as people would be probably utilizing directly going to the customers' places from home and probably will need only one office per city. And also we have seen that due to commoditization and brand of IndiaMART, now we are also able to do certain sales by way of channels, different outsourced channels. So there are certain costs that is, and since the salaries and everything is being resumed, and now we are going to look at the annual increments also. So some of these costs will return back. As we are still working 100% from home and we have not yet opened office. And as we open office, certain costs from the office will also come back. So we believe that 100 to 105 crores of the cost per quarter is in the near term should be assumed while calculating the actual profits.
Cash on your balance sheet, yet you are looking at raising equity. Why is that?
So if you really see in the last year, one, there is a India and internet opportunities have further accelerated after the pandemic. And we have seen, we have met, and we have evaluated multiple sectors and operations in the last year or so. And we believe that this growth story will continue further, and it will give many new opportunities as the transformation progresses. So we intend to make use of this opportunity in the investment in the strategic spaces, and to fund organic and inorganic growth opportunities. So that is why we are considering a fundraise. Secondly, if you see, we have 625 crores of deferred revenue, which is the customer advances on our balance sheet. That should not be considered as our own funds. So remaining balance is only 400 to 500 crores, which is required for the general corporate purpose and general cash reserve for the company.
Okay, so there are two ways to look at your fundraising plan. That, okay, market conditions are right, there is interest in the stock market and internet and platform companies, good time to raise capital because capital will be available on tap. Second is that you're raising capital because you're close to an acquisition. So what is the thought here? Are you raising capital because it's available, or you've zeroed on something very big and strategic, which once you raise capital, you may make that announcement within weeks of that?
No, it is not like we have zeroed in completely on, but we have looked at many different areas, and we'll continue to evaluate those proposals, and we'll probably try to do one or two acquisitions along with certain minority investments in the time to come. All of this will take time, and as and when things materializes, things will happen over the next year or two.
Okay, sure. Let's also just talk about, the kind of product segments where you're seeing value versus volume and traction really building up. Also the kind of volume of transactions or buyer-supplier activity or engagement that you're witnessing?
More or less, when we see November, December, I think except for the 10% of the categories, 90% of the categories have recovered, and in fact many of the categories are booming, and we are seeing some shortage of the products also in the market. So except aviation, travel and tourism, food supplies related, or events related, so there is an entire value chain of the B2B which consumes those things. A lot of BPO and IT offices are still closed. They consume a lot of vending, tea, coffee and facilities management. These kind of industries are still under pressure. But if you see all other industries, they have bounced back quite a bit. Apparel has also bounced back quite a bit. Automobile has bounced back. So we are seeing a broad-based rally, but the growth of those or the recovery has now probably slowed down to a normal growth, unlike the pent-up demand that we saw in the July, August, September, October time frame. And in terms of the products and sections that are working nice on IndiaMART, we have seen a lot of adoption of the buy lead or RFQ system, as well as the our CRM tools. And as you know, we had made certain investments in mobile accounting software called Vyapar, as well as in a dealer distribution management software called Bizome. So we'll continue to look at spaces which are adjacent to IndiaMART. It could be accounting, tax invoicing, receivables management, sales and distribution, payroll, cloud communication, or logistics aggregation and tracking platform, payment facilitation. We have still not done anything in the credit, API banking, business insurance. So there are many sectors which are adjacent to IndiaMART, and that will enable us to become a one-stop shop for the businesses to operate their business and to improve the customer experience and engage with the customers better.
Where do you expect, in terms of year end, then total paid subscribers, the kind of number that you see, by the year end, you're currently at over 148,000. The kind of attrition possibly you expect, and even growth targets for the year end. If anything, you could leave us with.
So pre-COVID, we were adding about 5,000 customers per quarter. Now, in the recent quarter, we have added about 7,000. Out of that, about 10 to 15% is the recovery from the customers we lost in the previous 2 quarters. So we are probably going to add anywhere between 5,000 to 6,000 new customers per quarter going forward.
All right, we leave it there. Thanks so much for joining us this morning, and good to get a check on how IndiaMART is doing, given all the traction that we've been seeing as well on the exchange. Let's take a very quick break. Back in a moment.